Hey there, and welcome back. So imagine this. You've got $100,000 in your pocket, ready to invest and make it grow. First off, congrats on making the smart move. Now, the big question is, where to put it? Sure, you could go all in on red at the casino, but let's be real. That's not exactly a winning strategy for a steady long-term income, is it now? Luckily, there are options out there that offer reliable returns without the crazy risks. And one of the top picks? REITs, Real Estate Investment Trusts. Yep, real estate. Now, I know what you're thinking. Real estate sounds intimidating, like it's only for people with a fancy degree or some kind of insider knowledge. But that's where REITs come in. They give you all the benefits of real estate without the hassle of buying property or dealing with tenants. Today, we'll be breaking down 3 of the best REITs to invest that 100K in, and why these are worth holding on to. These REITs are some of the best in the US market, so rest assured, your money will be in good hands with these top players. So without further ado, let's dive in and see where that money could go, and more importantly, how much it could grow. Let's start with Prologis, a giant in logistics and warehousing that, surprisingly, many people haven't heard of. Yet chances are, you've already used their services without even realizing it. If you've ever ordered something online, especially from Amazon, Prologis likely had a hand in getting that package to your door. They own and operate a massive network of warehouses worldwide, forming the backbone of supply chains for major e-commerce players like Amazon. With the rise of e-commerce, the demand for Prologis' facilities has been skyrocketing. They're a key player in logistics real estate on a global scale, and with e-commerce still booming, Prologis has been raking in the profits. So why is Prologis a great spot to put your 100K? Good question. It comes down to 2 big factors: the unstoppable growth of e-commerce and the necessity of efficient global supply chains. E-commerce isn't just a trend, it's a lifestyle shift that's only grown stronger since the internet took off over 20 years ago. And with Prologis leading the pack in this space, it's practically a money magnet. Think about it. Millions of packages are shipped daily, all needing storage, sorting, and distribution hubs to keep things moving smoothly. This is where Prologis shines. They're perfectly positioned to meet this demand, especially in major urban centers where space is tight and logistics are critical. So, if you invest that $100,000 in Prologis, you're setting yourself up with a stable, solid foundation. The dividend yield sits around 2.7%. Not the highest out there, but it's consistent. But the real appeal? The growth potential. Analysts are looking at about 10 to 12% growth per year as Prologis expands its warehouse network. Over the next 5 years, that initial 100K could realistically grow to around $160,000 to $180,000, thanks to both dividends and capital appreciation. Now, if you're thinking long-term and want to tap into the e-commerce boom, Prologis could be a great fit. But maybe you're more interested in something a bit closer to home, something more about everyday essentials. That brings us to our second REIT. Now let's talk about Realty Income, also known as a monthly dividend company. And that's not just a catchy slogan, it's their whole approach. These guys have been around for decades, steadily building a reputation for paying dividends every single month. In the world of stocks, that's rare. Most companies pay quarterly, so right away, Realty Income stands out. But here's what makes them even more interesting. Realty Income primarily leases to essential businesses like pharmacies, convenience stores, and big grocery chains. These aren't just any tenants. They're businesses that keep running even when the economy's shaky because they offer basic everyday essentials. That's why Realty Income is such a solid, reliable option in the REIT world. When it comes to dependable dividend-paying stocks, they're about as steady as you can get. So let's say you're putting $100,000 into Realty Income. With a dividend yield of around 5%, you're looking at about $5,000 a year in dividends just for holding onto your shares. And if you keep reinvesting those dividends, your gains could grow even faster over time. In 10 years, you could be looking at around $250,000 thanks to compounding and the potential for share price growth. And if you're someone who loves the idea of getting paid every month without lifting a finger, Realty Income could be the perfect REIT for you. But we're not done yet. We've got one more to cover. And this next one's a bit different. It's all about residential real estate with its own unique perks. All right, last but definitely not least, let's dive into Avalon Bay. If you're interested in residential real estate but don't want the hassle of buying and managing properties, Avalon Bay might just be the REIT you're looking for. They're all about high-quality apartment communities in major U.S. cities like New York, Los Angeles, and San Francisco, places where the demand for housing is always strong and renters are willing to pay top dollar for a nice place to live. So what makes Avalon Bay stand out? For one, they focus on the luxury end of the market. They don't cater to just any renters. They're after high-income individuals who can afford quality apartments, even if the economy has a rough patch. By targeting more affluent renters, Avalon Bay keeps vacancies low and cash flow steady. It's a smart approach because no matter the economic climate, people still need places to live, and those with higher incomes are generally more stable tenants. Currently, Avalon Bay owns around 290 apartment communities across the U.S., giving them both stability and a solid grip on the market. Now, what's in it for you if you put $100,000 into Avalon Bay? Well, their dividend yield sits around 3.6%. While that might sound a bit modest compared to some other options, remember, the real potential here lies in growth. Analysis estimate Avalon Bay could deliver annual returns of around 10 to 12% over the next few years. This is thanks to rising demand for urban rentals, especially in major cities where housing remains in high demand. If you're in it for the long haul, that initial $100K could potentially grow to around $200K or even more over the next decade, especially if you reinvest the dividends and as property values continue to appreciate. It's like a mix of steady income and growth, all bundled into one solid investment. So if you're looking for an opportunity to benefit from the strength of urban residential markets without dealing with the hands-on challenges of owning property, Avalon Bay could be a perfect fit. And there you have it. 3 powerful REITs that each offers something unique for your investment. All right, there you have it, everyone. 3 of the top REITs to consider if you got $100K ready to invest. Prologis gives you a piece of the e-commerce and logistics action. Realty Income keeps things steady with essential retail tenants. And Avalon Bay places you right in the luxury apartment market, minus the hassle of managing properties yourself. Personally, if I were you, I'd consider mixing it up a bit to make things more interesting. Each of these REITs has unique strengths, but all offer that great combo of income and growth. Investing in REITs is all about patience. These are long-term moves that grow steadily, giving you reliable income along the way and letting you sleep soundly at night. Plus, diversifying across different types of real estate can help you reduce risk. So, what do you think? Ready to dive into the world of REITs and put that $100K to work? Drop a comment if you're considering it, or if you have any questions on REITs. And hey, don't forget to hit that like button and subscribe for more investing tips and deep dives like this one. Thanks for watching and happy investing.